Joining us now live from the CME Group in Chicago, Jeff Carter at pointsandfigures.com. Jeff has over 20 years experience and trades interest rate futures, equity futures, and hogs as well. Also, Jim Bianco, president of Bianco Research since 1990. Jim warned of market trouble back in April and a return of inflation this year. So that's a very interesting call. Jim, let's start with you because we've been talking with Kumar at TCW. He's worried about deflation, and you say inflation could come back. Why is that?
It's a statistical argument. If you look at the way that the inflation numbers are created, I think what you're going to, what's been dragging it lower has been the owner's equivalent rent, the housing component. The first-time home buyer's tax credit has been behind that fall. That tax credit's over. I suspect you'll see stabilization in that, and if you do, you'll see the statistic of core inflation moving higher. I'm careful with my words by saying the statistic of core inflation going higher. That may or may not necessarily mean that inflation, as we understand it as a concept, is returning, but if the statistic goes up, it will get everybody's attention.
Jeff, you agree with that?
No. Sorry.
Okay.
I don't see inflation on the horizon. I think unemployment has to improve significantly before we have some inflation. I'm more worried about deflation still because the Fed continues to create money and put money into the money supply, and it disappears at vamooses. And so you don't have the velocity of money going from the banks into the overall economy and turning over. And so until you have that, you can't have inflation. So while I agree with Jim that inflation is definitely a danger going down the road, I think there's enough impediments to inflation short term that are going to stop it. If even next year, if you look at tax increases and things like that, that's not an inflationary environment.
Well, and they would love to have a little inflation come back, right? As long as it were the right size and in the right places.
You betcha. You betcha. I totally agree. I think deflation is a much more dangerous concept to an economic environment than inflation. Inflation's a lot easier to control than deflation.
Jim, what do you say to that? Is this the Fed's goal to try and bring back a little inflation in the right places, make us look good and feel good? It's better than deflation, right?
Yeah, that's their goal. And what usually happens when the Fed, well, yeah, what they'll wind up either giving us is deflation or massive inflation. They usually won't just give us a little bit of it. They'll either give us none of it or way too much of it. So I don't hold out hope that they'll get it exactly right. But, you know, I don't disagree with Jeff. Like I said, I think that a breakdown in the statistic might make it go higher. But I don't want to confuse that with the concept of inflation. Yeah. And that's what's going to be interesting to it's going to be interesting to see how people react to the statistic going higher as opposed to whether or not they think the concept is coming back.
Get back to Jeff Carter at pointsandfigures.com and Jim Bianco at Bianco Research. And let me ask you first, Jeff. I mean, what do you think the momentum here is? Has it turned around completely? Adam was telling us earlier, since we came down to the 200-day moving average, now rallies are where people just want to sell out their shares. Sorry, their shorts.
I think to be honest with you, you're into what in the South they'd call summer trading, because you know it's just gonna trade in a range. I think there's really, you know, we understand that Europe's in bad shape, and when the Moody's thing came out today, the market really didn't get a shock lower. The market opened higher, and it just melted off all day long and chopped around. So I don't see a lot of volume shooting through the market, and so I think you're going to be range bound for the rest of the summer. You might as well take it off and start investing in September of next year.
Hey, Jim,
this year, I mean.
Jim, does it make sense, the trade that we got? I mean, the Moody's news, when it first came out on Greece, we were all like, really? You know, no kidding. And, you know, we did see the market lose some of its, some of its gains, but it did hold on to some gains right on the news. And then it kind of just ran out of anything it had left here. I mean, does it make sense, the trade that we're seeing today? And what do you think it's really trading on? Is it just increased nervousness, another unknown factor potentially out there?
Yeah, it trades a bit like a bear market, that it keeps disappointing on the upside for the moment. But yeah, I think to your larger point, it does make sense. The Moody's downgrade goes with S&P. For the short term, it has no practical meaning because Greece is now going to borrow from the EU and from the ECB directly. They don't have to go to the capital markets for the next couple of years. Longer term, it's a problem. They have to get rid of those non-investment or junk bond ratings before they can come back to the capital markets. So it shouldn't have produced the shock value that we saw when S&P downgraded them a few months ago. But it goes to the larger issue. Everybody keeps saying we're getting this problem behind us, but we're really really not getting this problem behind us. We keep getting drips of more bad news. There's still a lot of people that cannot even explain what it is the ECB is trying to do, to what the EU is trying to do to bail everybody out. It's all kind of so much of scratching your head and not understanding it. And I think that that's really what's bothering the market. We need more clarity. Explain in very simple terms how we're going to solve this problem. And we're not getting that right now.
Hey, Jim, to Jeff's point about summer trading, so to speak, for the last couple of days, we have seen volume below usual. Given the backdrop you're talking about, I mean, do we even stay in a range, or do we continue to drift ever lower here?
I think we drift lower. If you back up and you look at volume, it was going up during the sell-off in May and in the early part of June. And now that we've actually started to rally, it's been really drifting off. Friday's volume in the S&P stocks was the lowest we've seen in 3 months.